Hey, what's up, everybody? Back is Zach with another episode of Journey to $1,000,000. And today, looks like we hit an iceberg, and our ship sunk a little bit. But overall, I don't think there's anything to worry about with the markets across the board are down. Most notably, we took losses in semiconductors and tech. And there was the news of the stimulus finally getting finalized today from the Biden administration, and that's going to mostly benefit the Dow Jones versus tech. So there was definitely a pullback, and we can see a lot of investors getting out of tech growth stocks and more into the traditional Dow Jones, and actually energy went up a lot today. So there's a lot of stuff that we can talk about, and I don't want to, on days like today, I don't really want to add too many new stocks to the watch list. So in fact, I didn't add any to the watch list because I more so want to try to plug the holes in the Titanic before we start looking at going in new directions. So let's go ahead and take a look. The daily report is posted on prostockadvice.com, link in the description. Go ahead and check all those other links down in the description. We have the Discord, we have the Twitter. Follow us on Twitter for the live trades that we do. And also, you'll know when we're live streaming if you go ahead and subscribe to the YouTube. Hit that like button. I really need it today, guys, because my portfolio took a hit. So, and anyways, let's just hop right into it. I'm down 55,000 today, 7.4%. And if you were on the live stream, we were only down about 4.5% when we hung it up. So yeah, the ship kept taking on water. But that's overall, it's going to be okay. I still don't think that I don't think that this is the beginning of a crash. Although it could be, and I'm kind of regretting not market buying those puts that we were talking about. But yeah, anyways, we're down like 7.4%, so that's pretty bad. But of course, it's mostly due to the semiconductors and tech, the 3x leverage ETFs that we are in. But hey, I mean, sometimes we have the plus 7.4% days, so it is what it is. Don't go into the 3x leverage if you can't handle it. I've been in Bitcoin for a long time, so it's not all that bad for me. I've had worse days than this. But yeah, and then the positions filled, if you guys want to go ahead and look at that. I went ahead and closed that AMD Condor, although that was a little bit tricky because Webull was showing it up like 70%, so I was like, okay, click close, and it had dropped down. So I think I actually took like a small loss on that, unfortunately. So that didn't work out like we had planned. But we did sell some Tesla covered calls, so we lowered our cost basis $3.20. So that's really going to be helpful because Tesla is taking a big hit. It's down like 8% today, which is not a little bit. And we actually took profit on Ford. Cost averaged more print. Dollar cost averaged more ARC-W and ARC-F. And ARC-G. So overall, it was a pretty good day, although the ARCs did dip even further. I think most of those are down about 5% across the board. Let's go ahead and take a look at those. Yeah, those are doing pretty bad. Yeah, ARC-F 5%, ARC-W is like down 6%, ARC-G down 5.8, ARC-K is also down a lot, more than 6. So those took a really big hit, and those are not even leveraged, so those took a big hit. But as far as the 3x ones, the SOXL was down 10%. I mean, after market it's coming up, thank goodness, but it was pretty bad. The Dow Jones actually eked out a small gain yesterday, so go figure. But it is what it is. S&P still down, we're just down, but mostly it's going to be tech and SOXL. The funny thing is, the one day that I wanted to put $1,000 more dollars into O from the dividend, since Webull doesn't have the DRIP, dividend reinvestment program that automatically reinvests your dividends. But yeah, anyways, Webull doesn't have it, so I was just going to throw my dividends into it manually, and go figure, it's the day that it went up 1.6%. But see, that's the thing is, if you don't have any REITs, or you could do energy, but or even precious metals, but find something that on days like today, if your portfolio is heavy in tech or heavy in semis, these will actually not do as bad as some of the other ones. So it's always good to do something like that. Thinking about that, I want to go ahead and put more in O next time it's down, which is pretty much almost always. It doesn't really go up. That is what it is. It's paying 4.5, 4.6% dividends. Yeah, but anyways, it is what it is. All right, and here are my current positions. I'm kind of moving away from the Excel because it's too confusing and it doesn't properly represent the condors or covered stock. So I'm just going to go ahead and post the screens. You guys can take a look at that on the daily write-up. But anyways, overall, I think it's okay. We would expect a pullback, but let's go ahead and look. And this is mostly due because of the interest. The bond yield interest rates are going up, which they were going to eventually go up. That's not really a surprise, although it just sucks when it happens and it doesn't feel really good. But as you can see, we're not down all that much. Of course, this is the NASDAQ, the QQQ, since tech took the biggest hit. So the dip that started on the January 26th, which was only a couple of weeks ago. It was actually about a month ago, huh? But yeah, I mean, we've had these dips before, and it's not as bad as the one in October leading up to the election. But this is on par with the one starting on January 26th. Now, keep in mind, we've only had 2 red candlestick days in a row. I mean, there was dropping a little bit, but they did come back up. So there was a little bit of hope that was on the 17th and the 18th. So it's really not that bad. It's only going down for 4 days now. Maybe 5 days, I guess you could say. But 2 of those, there was hope there and it was coming back up. So we're really just going to wait around. I mean, like I said, on days like today, I don't want to be doing anything crazy because I just want to be dollar cost averaging my more important positions, my longer term buy and holds, no matter if it's leaps or common stock. But mostly I'm focused in leaps right now because it's really going to get cheaper exposure, which is good because I have a lot of money tied up in things that I need to wait to sell for tax purposes before I can rebalance. So it is what it is. But we did get those ARCs and Apple leaps we were trying to dollar cost average in. But anyways, so the stimulus is confirmed, and that's going to more benefit Dow. You guys can look into it, but it's more going to benefit the traditionals and not so much tech. So people are kind of transitioning into those. But if you look, I see a lot of people say that March is like the month that everything bad happens. And even though this is just a normal correction right now, just a small one, nothing to panic about. And also, if you look, March and April are actually bullish months overall. So let's just keep seeing. They're still printing money. COVID's on the up and up. More people are getting vaccines. Just a bunch of negative news going around right now. But yeah, I wouldn't worry about it too much. But don't use all your money to dollar cost average on the same day. You should split it up where you have a little bit left that you can keep dollar cost averaging over at least a week, even more if it's a really big dip. But anyways, all right. So none we're adding to the watch list today, but we will go through some notable mentions, including SPCE Virgin Galactic. It is it's closing in on my buy zone. I sold a put for $46. My strike was $46. That is. And yeah, so we're getting close to buying some of those. So that's good overall. I don't see this going down all that much, although hopefully it does get into my buy zone a little bit. But currently it's like $47. So we're getting close. So that's actually good news for us. CCIV took a huge hit. CCIV confirmed the merger with Lucid Motors today. And actually the stock just plummeted. But that's okay because if you guys were paying attention, I was saying take the profits at 50. And it even ran up to almost 65. So hopefully you guys were taking consistent profits. Remember, I always say for options, always take profits at 25, 50, 75, 100, and then let one run. So you could have let one run and it would have crashed. But hey, if you took it at 25, 50, and 100, then you would have gotten all your money back. And you would have easily been 100 if you had bought down here when we were first starting to talk about it. So it ran up really nicely. But anyways, it's coming back to the support, so around, I think, 35 to 37, it would be interesting to start buying again because the merger is confirmed now, so now it's not rumors anymore. And okay, and the next notable mention would be NET. NET could be a good one to dollar cost average. This is not a small company. The Cloudflare does have a huge market share in its space. So since this is pulling back to the support, I would be interested in doubling up on my option play. And then the last one is a smaller cap, but it's Nano Dimensions, which is, if you remember, that's the Israeli 3D printing play. And it did break my weaker support, but it's coming down to the stronger support. I've got a buy order in for it, and I'm actually on this one specifically. Let's take a look at the Weeble. I want to look at the day chart. I want it to dollar cost average all the way down here. Now if we go into the 4 hour, you see that it is coming down. It's broken the weak support, but it's coming down to the stronger one, and the stronger support for me is going to be at this slope right here. So we'll see if it holds. We'll see if it approaches, but it's down 10.5% today, so could be a good time. Lee seems like it's coming up in after hours, up 0.3%, so this could also be interesting. We'll see if it can get back into this parallel channel, which sometimes it goes above, sometimes it goes below, but in the average, in a bull trend, it should come up to that. Tesla is not doing very good. Most of the EVs are not, but it is what it is. Tesla's still in my buy zone, so I would dollar cost average if you have some, but since I already have 100 shares, I don't want to do that, but I will keep selling covered calls all the way through. So, and we actually have one right now. But anyways, that's about it, guys. Find the ones that you like, find the bigger cap ones, the ones that are less risky, and dollar cost average those, and then wait for the market to show some signs of life before you start dollar cost averaging into the smaller plays. But just keep in mind, keep enough money that you can keep doing this over not just 1 or 2 days, but over more than that, just in case. And also, don't forget, the risk is on a scale of 1 to 5, 1 being the smallest, 5 being the largest, and 1 should be the most money, and 5 should be the least amount of money you're putting into this. And go ahead and look in the description for all the links you can follow. Please go ahead and like this video if you appreciate it. I really need it today since we're down so much. The Titanic is sinking. Please help me plug the hole by liking this video. But I appreciate it, guys. And if you wonder what platform I'm using, it is Weeble. And if you need a new platform that's really good for research, really good for different tools and for the charting and stuff like that, please go ahead and check out the Weeble. Link in the description. You're going to go ahead and get two free stocks right now they're doing. One could be Facebook and Google, I believe, if that's right. But anyways, guys, I appreciate you guys, and I will see you guys on the other side.